Welcome back, investors, to Ticker Time News. I'm Adam, and the stock market ended Thursday on a firmly higher note, with the Nasdaq up 1.9%, finishing ahead of the S&P 500 up 1.4%, and the Dow up a solid 1%. Equities followed yesterday's weak finish with an opening advance and a day-long extension of the early gains. The S&P 500 clawed back above its 200-day moving average at 4476. And I think we can see a melt up to this top yellow box area, sitting right around 4580 to 4590 for the S&P 500. That is our target. Now, the S&P 500 200-day moving average at 4476 right now, it's been in focus since last Friday when the S&P 500 got right to it and was hit with resistance. Now it seems to be flipped and acting as support, while the Nasdaq continued this week's outperformance. Nasdaq faced some pressure in early trading, but it took the lead in midday action and never looked back, with chipmakers fueling afternoon gains in the tech-heavy index. Now, NVIDIA, ticker symbol NVDA, up 9.8%, and Intel, ticker symbol INTC, up 6.8%, finished in the lead. NVIDIA rallied to its best level in 10 weeks, while Intel overtook its 50-day moving average at 48.75. And remember, bullish above, bearish below when it comes to that 50-day moving average. Now, Intel is approaching its 200-day moving average at 52.04. The technology sector, up 2.7%, was the only group to gain more than 2%. While the material sector gained 2% even, it finished just behind, outperforming throughout the day. Now, steelmaker Nucor, ticker symbol NUE, up 4.3%, and fertilizer producers Mosaic, ticker symbol MOS, up 0.9%, and CF Industries, ticker symbol CF, up 2.7%, hit 52-week highs as concerns about supply and rising prices persisted. Crude oil, meanwhile, was a soft spot today, but not before it touched its best level in almost 2 weeks in the overnight trade. It finished today's session with a loss of 3.5% at 111.24 a barrel. However, the energy sector was able to eke out a slim gain, extending its week's advance to 5%. The consumer discretionary sector, up 0.7%, finished near the bottom of today's leaderboard as modest losses in influential components like Home Depot, ticker symbol HD, down 0.4%, and Lowe's, ticker symbol LOW, down 0.8%, overshadowed gains in most remaining components. Home Depot and Lowe's retreated after KB Homes, ticker symbol KBH, down 4.6% on the day, missed Q1 expectations, but reaffirmed its guidance for fiscal year 22 revenue. Elsewhere in the discretionary sector, travel names finished among the leaders, with Booking.com, ticker symbol BKNG, up 4.7%, ending in the top spot after Trip.com, ticker symbol TCOM, up 2%, beat Q4 expectations. Treasury slumped right out of the gate, but rebounded as the day went on. The 30-year bond turned positive in the afternoon, sending its yield lower by 1 basis point to 2.51%, while the 10-year note finished with a modest loss, lifting its yield by 2 basis points to 2.34%. On the economic data front, durable goods orders for February declined 2.2% month over month after increasing 1.6% in January. The downturn likely reflects some natural slowing, meaning it's too early to really tell if this is the start of a weaker trend. Tomorrow, investors will get the February pending home sales report. Okay, here's where we stand year to date. The Dow Jones is down 4.5% year to date. The S&P 500 down 5.2% year to date. Russell 2000 down 7.6% year to date. And the Nasdaq out of correction territory, down 9.3% year to date. Now, Sweetgreen, ticker symbol SG, announced that it will be opening its first, quote, Sweetlane concept within the next year. The new pilot restaurant will feature Sweetgreen's best-in-class in-store experience with the addition of its first Sweet Lane, a drive-through lane to increase convenience for digital customers. To utilize Sweetgreen's Sweet Lane, customers will place orders in advance exclusively through Sweetgreen's digital platform. The space will also feature a round observation window for customers in their cars to watch the fresh prep as they pick up their orders, bringing the in-store experience to drive-through digital customers. Pickup orders may also be placed inside the restaurant where dine-in service will be available. Sweetgreen reported strong earnings on March the 4th, and guidance was just what investors wanted to see. That first earnings report following the IPO is critical, and I think Sweetgreen did a really good job with it. However, their story isn't entirely clean. Sweetgreen is focused on expanding its footprint, so reaching profitability will take years. I do think a healthy fast food segment is underserved, and that presents an opportunity for Sweetgreen. Salads tend to be an afterthought for many big players in the space. For example, McDonald's, ticker symbol MCD, stopped offering salads during the pandemic and only recently relaunched them. And it only sells the prepackaged salads like what you would find at a grocery store, so not their quality ones. Its quality salads may never return to the restaurant. So that does present Sweetgreen with an opportunity to take advantage of. But time will tell on this one if the quote Sweet Lane will take effect. So what do you think about Sweetgreen offering a Sweet Lane, a drive-through at their restaurants? Let me know in the comments below. Smash that like button, share this video, and beat the market with us by clicking the first link in the description. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.